Yep, we're live.
Welcome back to another episode of Token Narratives, where we discuss the biggest narratives shaping the Bitcoin and cryptoverse. I'm Graham Stone, joined by Bitcoin.com news and research gigabrain, Mr. David Sencil.
What's going on,
David,
man?
there's a lot of fear in the market right now. Bitcoin has broken below $100,000. It's not just a wick.
It's a daily close.
It's a daily close below 100K.
Yeah, first daily close below since May.
Since May.
So
the fear and greed index has been ramping up in the fear on the fear side. Obviously, we're not in the extreme fear territory for this kind of fun sentiment indicator, but nonetheless, there's a lot of fear on the timeline. I had a friend, a mutual acquaintance, David, who you know this guy, called me last night. There's a tone of desperation in his voice.
Oh no! Asking for what? Asking for like is the cycle over advice kind of stuff.
Asking for hopium, I guess. Yeah.
Oh wow! Now that is that's definitely an anecdotal indicator right there. When people start calling you, not just a text message. That's yeah, I like that kind of indicator. So, I mean, I don't know if we want to jump around a lot, but since we're talking about sentiment, let's just talk about this for a second. There was a couple of good posts this week that on sentiment that I thought were interesting. The first is from the kind of legendary CT trading account Donald, that duck. I don't know, you follow him as well.
Yeah.
This guy's like a master level troll slash shit poster, and I think it's part of his process, honestly. So he had this like incredibly bearish posts talking about how the chart looks like dog crap, but then like an hour later or 2 hours later, he replied back to his own post saying, hold on a second, usually when I post really bearish charts like this, the comments are just filled with angry replies saying, we're still in the bull cycle, you don't know what you're talking about, you're an idiot. But this time everybody agreed with me. Mostly everybody agreed with me. So he said, I'm going to read it. Not going to lie, I've never had so much bearishness under one of my posts. You all are starting to make me reconsider. Might just close my short and let it play out without me. And so he's like, yeah, I only got insulted twice while everyone else is just piling on the kind of the bearish price action. So, okay, that's one thing worthy of note. The other is, I think it was Joe Consorti. He said that we haven't been this bearish. I don't know if I put it in the doc. It's in my other thing. He said that hasn't, for his other indicator, it hasn't been this bearish since, what did he say? 2022. So there's another indicator showing that bearishness is at levels not seen for a long time. Okay, again, maybe bottoming out on bearish sentiment. The last one, though, is from a great account. What's his name? Horse, the trading horse. I can't remember. And he said something that I think might be actually true too, which is, none of this really matters anymore. The sentiment, these kind of sentiment metrics, indexes don't matter anymore because the marginal buyer of crypto has changed, right? The marginal buyer is institutions, is TradFi, and they they are not as paper-handed, finicky, passionate, right? They're a little more calculating, cold-hearted, and so these sentiment indicators were much more useful back in kind of in previous cycles where it's all paper-handed, redacted people like you and me, Graham, who can be kind of swayed with bearishness and bullishness. So take of that as of what you will. I don't know if you have thoughts on that.
Not really.
Well, let me ask you a question. What do you think about that last one? Because this to me, I think really does capture maybe this time is different feeling. And I talked about it last week, or I tried to. I wrote about it last week in my newsletter. But you're really going to see a bifurcation of sentiment, I feel like. And the Bitwise president talked about this on Bits and Bips last week, and then was reiterated this week again on another podcast, which is the like people in Bitwise and other crypto companies that are interfacing with TradFi players on a day-to-day basis, they're very bullish. So price action looks terrible. Crypto timeline has very negative, is very negative. However, all these TradFi players are incredibly bullish on crypto, and so you have that's one section, and then you have all like the retail traders, the people on crypto natives, and it feels a lot more bearish. And so I think there might be this bifurcation here.
Well, what are they bullish on specifically in crypto? Because is it equity in Circle, for example, or like some token?
Both. It's both. Um, it's in the growth potential of companies, crypto companies like Circle, or whatever, a dozen other players, prediction markets, poly market, um, all the stablecoin stuff. The space is again, it's small, right, compared to TradFi players, and so the growth there is huge. It's in tokens like obviously Bitcoin, right? Um, they see a lot of growth potential there. Other tokens like Sol and even XRP, maybe even Ethereum, a lot of potential hype as well. Uh, Again, we have some data to talk about this later, or we can get into it now. And so for them, um, I think TradFi is looking at this as not in like the short term, right? They don't usually do look at this in through a short term lens. They're looking at this on a medium to long term play, and it looks like the very beginning of um, of kind of growth where traditional finance can pile money in to the space finally, and you're going to probably see um, a lot of I think they see a lot of value potential here. And if you have people puking on the short term, that probably looks better to them, right? Because they're not trading on sentiment, right? They're kind of looking at the more, I would say, long term possibilities. Um, there was a great post. I really should have saved it, but it was from a TradFi person who works in TradFi, and it basically was a story. It was like, you are a an RA. What is that? A registered
Advisor or something.
advisor, right? Yeah, you're an RA. You've been spending the last 18 months working through your analytics and your risk profile to onboard your first high net worth individual into Bitcoin and maybe some other crypto companies on the long tail. The high net worth individual and their what's it called, home office, has finally signed off on your proposal, and you have started to DCA or TWAP into the assets that you outlined for the past 18 months. You open up crypto Twitter, you see everyone is bearish and sell, 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 um, and you smile, close your terminal, and go play golf, knowing, this is great. This is great for you because I mean
Yeah, you want to be, if you're in that situation, obviously it's better to be buying in this kind of scenario than where like there's euphoria and the price is just going up.
Yeah.
But David, I want to ask, so therefore you might expect that there is a pretty limited bottom, like to how low Bitcoin can go here, right? uh Care to speculate?
Yeah, I mean, I can throw out numbers. I'm no expert. All I'm going to do is regurgitate what much smarter people have said, right? So this is, and I don't have the receipts on hand right now to throw it out there. But let me just give a slightly more color. The whole point is the people who are buying now these RAs and stuff, they've done their due diligence to the point where by TradFi metrics, they have outlined the downside, and so they don't really care about the chicken with their head cut off news du jour about how this is a bear market, whatever, right? Like they're
Yeah.
comfortable. They've done actual work,
Right.
database
And
work.
what
So
I'm saying is that you've got this sort of structural buyer now, and therefore to me that puts a limit
no,
on how
no, I
low we
agree.
can go here, right?
Yeah, yeah, but I just wanted to put some color on it. The reason that they're confident is that they've been working for like a year or more for
Yeah,
this.
ever
And
since the
then
ETF was approved
yeah, and
over
so
a year ago.
so
Yeah.
this short-term noise doesn't mean anything to them because that's kind of already kind of baked into what they're going to buy anyway. So how low could it go? I think I listened to a podcast this week and they were talking to some of these people who are in that crypto tradfi world were saying, yeah, you could see as low as 80, as low as 80, but that would be like an instant buy, insta buy. 90s, 80s, insta buy, no problem with that whatsoever. That's Bitcoin though.
So we're looking
Um,
at a floor of probably max pain 80,000 for Bitcoin,
and highly
because
unlikely,
at that
I would say.
if it ever did get to that level, yeah, there's going to be it's highly likely that you're going to have a pretty serious bounce. Obviously there are black swan scenarios where things could get worse than that, but that's I'm seeing similar, like hearing similar numbers, right?
Yeah,
Like that's at that point. So you've got we're at 100 now. We've already dropped from
below
the
100,
all-time high of like 125 or something. So we're
126.
already down like 25%, 20 over 20%. So another 20% drop, that gets you to like closer to 80.
Yeah. Now,
And
but here,
so it does seem that the asymmetric, or like the risk reward, is starting to favor buying Bitcoin at this point.
yeah. Now, a couple things here too, which I think I also agree with is often you see Bitcoin leading other risk assets, right? Because it's a lot more sensitive to uh, like liquidity or even fear, things like that. And so I think there's a pretty good chance that. So talking about black swans. What people are often worried about, I think, who've been in this for a long time, is let's say equities puke, and they really haven't puked that much so far. But let's say the AI bubble thing, kind of you see the black swan, and not a black swan, but it pukes. So you see Nasdaq, S&P down 10%, something like that. The fear usually is then Bitcoin reacts worse, right?
Yeah.
However, thus far, Bitcoin has been going down while equities have kind of just remained at this elevated level. And
Yeah.
so I think what you could see here is Bitcoin leading risk assets. And so if you get a puke in equities, which I think is a reasonable thing to expect, I think
Yeah.
you might see a puke. I would bet that Bitcoin would go down less on a percent basis. Do you know what I'm talking
Yeah.
about? Because it's already front run most of
Absolutely.
that.
And there's even the potential that you start to see a reverse correlation at that point, because um, where are people who are cashing out of equities? Where are they gonna go? Obviously, they're gonna a lot of them are just put it into dollars or money market funds or whatever. But you might see like people saying, okay, this is actually an opportunity. Bitcoin's already gone down a lot. Uh, it's the gold alternative. Maybe I'm just gonna rotate from extremely overvalued stocks to now relatively undervalued Bitcoin.
Yeah, I mean, I don't think it'll be a hedge, right? Like in a risk off environment, I, I think it's pretty clear Bitcoin doesn't do well in the short term whatsoever. Never has, and I don't think it will anytime soon. But I I wouldn't be surprised. In fact, I I'd expect Bitcoin to go down less than equities and rebound first.
Yeah,
So again, for me personally, I'm not worried about Bitcoin really at all. I still think we're in a bull market. We've talked about this for a long time. Blah 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 blah. But I um, I do think that we're probably not at the bottom, right? Like so, I have been. I mean, I think Bitcoin is still not ready to bottom yet. Um, and people have been calling the bottom for a while. A lot of people that I follow, I still don't think we're there yet, personally.
yeah.
Um,
And interestingly, well, like it seems like consensus is that Bitcoin could bottom at 80. And when there's consensus like that, what actually ends up happening is usually something not as bad, right? Like in
yeah,
the last bear cycle, everyone was calling for like 10K Bitcoin, but it never got there, right? People were waiting. No, I'm going to wait till it
yeah,
gets there and then I'm going to buy. So the market just finds a way to like inflict max pain on participants.
yeah, absolutely.
So if you're expecting 80, uh, you might not be in luck, right? If that's your plan, right? So
Totally. And now, as far as this concerns alternative coins, altcoins, yeah, I mean, I would expect it to I would expect those to draw down massively. Um, and like you see with Bitcoin, usually when the market turns down, Bitcoin dominance rises, right? And so even though Bitcoin's going down now, it's going to be going down less compared to altcoins. And so you'd see BTCD continue to rise. And if Bitcoin hits 80, let's imagine Bitcoin hits 80, which I don't think it will, but let's say it does. Man, I think you'd see a massive spike in dominance correspondingly.
yeah, let me just bring up the dominance chart right now. So we're at 60%. The most recent bottom was in September at 57%. Before that, November of last year, so a year ago, at 54%. Let's bring up some other charts here because we started publishing these charts on Bitcoin.com, charts.bitcoin.com. And this is a tried and true favorite of people, the Bitcoin Pi cycle top indicator. So it's very simple. You've got the 111-day moving average, that's the orange line, and the 200-day moving average is the red line. And historically, when the orange line, the 111-day moving average, comes up and touches the longer moving average, the 200-day moving average, that like corresponds pretty closely with a peak in the price. So it happened in 2017, again in 2021, and then right now, right, we're quite far. They're quite far from each other. So we've also have dropped below that 111-day moving average, which yeah, can continue to be paying for quite some time. But we haven't seen it get that close, right? The closest it got was in June of last year, since 2021. So I don't know. Maybe this indicator is not telling us as much as it once did, but it's something interesting.
Yeah, nice. I know our CEO likes this as a cycle top indicator, one of the cycle top indicators.
Yeah.
So, do you have other charts or?
Well, we could talk a little bit about the global M2 money supply. You know, people have, and me included, have been saying for a long time that how you know Bitcoin is very much a liquidity sensitive asset, and when global money supply or global liquidity is rising, so too does Bitcoin. And I've been listening to Michael Howell, his takes on this recently. He's repeatedly been saying that he's cautious at this point because he sees global liquidity kind of running out of steam. And then a lot of people have been saying that because of the US government shutdown, that has taken a lot of liquidity out of the market as well. And that now that the shutdown is over, the Treasury General account can start spending money and putting liquidity back into the market. So, I mean, that partially probably explains some of the volatility we've seen here in the last few days. Bitcoin was up to like 107. But I think, David, as you noted, that people um, are saying, well, actually, this government shutdown is a pretty, the end of this government shutdown is a pretty weak end of the government shutdown. There's just a like a kind of a
Stay,
postponement of the
stay of
of the
execution. Yeah.
yeah. And liquidity hasn't actually started moving back into the financial markets yet. So like the volatility is just people trading what they think is going to happen, speculating what they think is going to happen.
Yeah, I mean, I agree with that, and I think Michael Howell is definitely someone to pay attention to. Um, I also think though that this whole government shutdown thing is not over, right? It's postponed until January, I believe. And so if we have to go through this whole thing again in January, it could be, I'd imagine the reaction will be worse than this time, right? Because just double whammy of what's it called, of risk of not knowing what's going to happen. Not good for markets. They don't like risk. They don't like unknowns. So you have to price that in. Um, there's also the matter of like this government shutdown has had secondary and tertiary effects. Like um, we're not going to get labor data apparently for October. So that's just not. They're like, I think the government released some information saying, yeah, we don't have labor data for you for October, so we're never going to have that. Obviously, markets don't like that as well, right? Like the normal what's it called, ways to take a temperature on the state of the economy. Just we're not getting that, so uh, not great for that. Again, this is all I think relatively short term, short to midterm um, problems. I listened to a podcast where people were these kind of pundits and people who work in TradFi and crypto were talking about this, and they were saying everything that's happening, like on a macro geopolitical scale, really is all aiming in the same direction, which is we're going to have more government spending in America and everywhere else. We're going to have debasement of fiat. Um, we're probably going to have more inflation. We're going to have stimulus checks in Japan and probably in Europe. And it looks like Trump is trying this in the US. We'll see how far he goes with that. So the direction seems very clear, right? This is great for uh, Bitcoin and crypto, right? This is the thesis. This is the thesis. So
Yeah.
we can all kind of see where we're going to end up with, where we're going
Yeah.
to end up at in the medium to long term. But in the short term, right now, it's hard to see exactly what path we're going to take to get there.
Yeah, exactly. And then just bringing up like another chart here from charts.bitcoin.com, right? Like all of these charts are sort of saying kind of the same thing, which is that currently Bitcoin is in the like the buy the dip zone, really. Uh like here's the golden ratio multiplier. It's a bunch of, I don't know, Italian mathematicians or something, Fibba pizza or something. And it's a Fibonacci, right? Um, yeah, and so here this one is like currently we're like right at the bottom on the 350. We're like touching that 350-day moving average, right? Historically, anytime it gets close to this line, right, you get a bounce.
Yeah. So again, um, short term, hard to tell where we're going. Long term, again, medium to long term, I think it's clear. There's other like um, bullish news on. Again, this is more TradFi related, but Circle Circle had its Q3 earnings results this past week. Incredibly, very, very strong earnings. Um, and you had people like Hunter Horsley of Bitwise talk about how like these kinds of earnings are, you know, big business, big boy earnings. They can't be ignored by TradFi. They're looking at this and kind of maybe salivating and be like, oh man, this is you know this is legit. This is where we want to be. Um, you have J.P. Morgan last week announce or this week announced that USD deposits on base with their JP Morgan token are online, and this is like their first step to allowing their institutional clients to settle to settle with USDC and their JP Morgan tokens. Uh, what's it called? Deposits. Again, just the first step in terms of getting that online. Incredibly bullish for that to see you know the biggest banks in the world moving on chain in such a big way. Then we get to the DATs. Graham, we talk about the DATs. DATs were a mixed
Yeah.
bag this week, but really good news on some sides. BSOL, the Bitwise first US spot Solana ETF, had 12, I think maybe 13 now, straight days of positive inflows. So while while Bitcoin and the crypto markets broadly have been going down, BSOL has had nothing but inflows, positive inflows for 13 days straight, 12 to 13 days straight. Really, really great news for that. Shows that you have TradFi institutional interest in getting exposure to Solana. Canary Capital, they launched the first US spot XRP ETF on yesterday. It did really well. That's an understatement. It beat BSOL's largest day one trading volume for 2025. So now number one is XRP, number two is BSOL, number three is some TradFi ETF. They had over 80, what is it? Over 58.5 million versus BSOL's 57 million. Total inflows into that ETF, 245 million. Again, these are great numbers. And not just for crypto ETFs. These are great numbers for any ETF. Again, all while the market's going down. Incredibly bullish, right? You can't help. This has to be incredibly bullish. So you have that, but then there were some bearish things. I don't know if you want to cover that. Let me cough here for a second.
Yeah, just to note that in this week where you've had billions of dollars flow into the Solana ETF, BSOL, the price of the SOL token has dropped like 25%.
However, like again, if you're a TradFi person, you're like you'd be like, I think, happy about this, right?
Right.
You're not trying to sell SOL here for a like a hedge fund trade in like 30 days or something, right? Like that. So to me, it's just a different kind of player, right? They would see this SOL price going down and be like, oh, great. Tomorrow when we buy, we can buy even more. you know,
Yeah.
very different mentality. um, the bearish things. So again, we've talked a lot about DATs this year, and I think you're starting to see this reality though that these passive DATs, these DATs that are simply buying the spot digital asset but doing nothing, kind of programmatically buying it, they are getting their lunch eaten, and they're really basically, I guess the market is coming to realize that there's no reason to buy these. Better off just buying the ETF, right? I think someone from Bitwise actually said that this week. Like, just what if you have money and you want to buy a digital asset through traditional financial means, if it's a passive digital asset treasury, just get the ETF, corresponding ETF. There's no point getting the treasury. Here is a chart that shows strategy MSTR against IBIT, BlackRock's spot Bitcoin ETF. And as you can see, it's breaking down bigly. Uh, you also had news this week that strategy went below par MNAV, right? It went below 1 this week. So these kind of passive DATs, which are mostly Bitcoin DATs, are really struggling to, I think, show that why would you buy these DATs over the spot ETFs? Just this morning, Unchained released a report, I think a damning report, on ProCap. This is Pompliano's DAT. I don't know if you saw this. I only saw this report, Graham.
I did not.
It was not looking good, right? Like it's the classic, not the classic, but I would say the one of the common things you see in these DATs, which is who wins on these DATs. It's the people who issue them. It's the banks that underwrite them, I guess, or yeah,
Yeah,
help
the
release them.
managers. There's we talked about this before. The management fees on them are insane.
Yeah, and
So yeah,
so like this report said some like crazy things, like the DAT could go the stock price of the DAT of ProCap could go down 50%, and Pompliano could get $40 million as a reward for that.
yeah, it's tails I win, or heads I win, tails you lose
Yeah.
for the
So
DAT insiders. But the real question is, what does it mean for the for as it pertains to people who want to want the price of Bitcoin to go up, right? Or their favorite crypto token. What does this whole the DATS companies converging on their MNAV below below the 1? What does that actually mean? Does it
so
mean they're going to have to start selling the underlying assets?
yes, probably, but to your to your to answer your question straight up, I think it's a wash. So in terms of the Bitcoin that I hold, I don't think it's going to really impact price in a negative way. Um,
Did it impact price positively on the way up?
yeah, it did, right? Like earlier this year, so last year, uh, the marginal buyer of Bitcoin was through the ETFs, right? And that kind of supported price. And then that continued, but it slowed down. And then from like 2025, this was also last year, but it kind of really ramped up in 2025. Bitcoin's price was really supported in a positive way by all these DATs buying Bitcoin, right? So you saw that going up. Um, Now, what I think is going to happen though is so that buying pressure is gone, right, from DATs. But if these DATs are forced to sell Bitcoin, I think the market will just absorb it, right? So maybe a minor headwind, but I don't even really think so. I think a lot of people, a lot of companies who are patient, they're probably again waiting for these DATs to sell their Bitcoin, and then they can just gobble them up, hopefully at a discount, right? And so they're going to be happy to do that. I think so. The people that suffer are the people who bought the stock of these DATs, right? Those are the
Yeah.
true losers. But I don't think it's really going to have much of
Yeah.
an effect on price
Yeah. The
negatively.
ones who didn't get it on day one or in the private placement beforehand, those are
Ex-
the real
exactly,
victims here.
exactly. Now again,
The
there's two
stocks.
sides to this though. If you're the I think the passive DAT bid is I think we're seeing that maybe play out to be not valuable. But on the other hand, you look at Sol, you look at XRP, you look at some of these other assets, like I think Hype, where it's harder for TradFi to get um, harder for TradFi to get access to those. Number one, harder to get access to those assets. But number two, these are not passive DATs, right? Um, Sol, for example, all of that is staked through Helios, like we talked about. Really net positive for the space. Um, Solana luminaries like Kyle Samani. Um, they're helping build out the space. So buying
Yeah.
the
So the DATs are kind of like a second foundation for the
yes,
token.
yes, and so it actually it in some ways you could even say honestly, um, it might be better for the price of Solana or for the chain to buy the DAT and expect the kind of what's it called, the people who are running the DAT to know much better than you how to use that money, right, and how to actually get some like positive uh, positive growth out of it than simply just owning the underlying spot.
Right.
But for Bitcoin, I don't know, man. Again, that's never really made a lot of sense to me, right? Like,
Well, I mean, the other big element with the DATs is that you have a sort of a cheerleader, and Michael Saylor has obviously been one of Bitcoin's biggest cheerleaders. Brought a lot of. He's out there like pounding the table in all over the corporate world, trying to get people to yeah, allocate to Bitcoin, right? And so him having this massive pool of Bitcoin behind, like in his company, is motivation for him to be a Bitcoin cheerleader, right? So I guess that for like broadly investors in Bitcoin, that's kind of the value add. That in addition to some of the other things that he often talks about, like the passive flows right into it, and these a little bit more exotic financial instruments that enable steady purchases of Bitcoin over the long term via what the strike, uh, the yield, and I don't know, like financialization of it that makes it possible to just keep allocating to Bitcoin and like sucking money out of TradFi and putting it into Bitcoin, right?
yeah, I mean, so part of that I agree with, and this is what sold me on the first thing that kind of changed my mind about DATs. I was completely against them for most of the year. Is that Arthur Hayes thing, right? Which is you want to bet on the DAT that is going to get big enough to be included in some index where everyone in the index has to passively buy the index, right? And so that kind of is what you were saying there. So that makes sense. The other stuff, though, I still struggled with all year. And then I think I said maybe on here or with you privately, I asked somebody who's deeply, deeply in this field, and I respect a lot about this. I don't want to out them or anything. I was like, look, am I stupid? I was at a conference. I was like, am I stupid, or do I not just understand this financial stuff, the things you were talking about? It just doesn't seem. I just can't wrap my head around it. Why is it better to buy that stock than to just buy the underlying? And the person said to me, was like, no, you're not stupid. And the fact that all these companies are having to dress it up in all this financial kind of complicated whatever is a sign that it's probably just adjacent to a scam.
Right. But I'm not saying about that people should be considering buying the stock. What I'm talking about is how what the effect of the debt is on the underlying asset. And I think there are scenarios you can outline where like it's just a net positive for the asset, right? To have this this person embedded in the TradFi world, finding ways to get more, essentially to get more buyers for the underlying asset. In the case of MicroStrategy, it's Bitcoin.
Yeah, I mean, so that's what I was saying. Part of it I agree with, which is
Yeah.
you get into the index, but all that thing where Michael Saylor made an actual pyramid
Yeah.
with all the different financial vehicles that I don't understand, that is probably just maybe not helpful or whatever. Anyway, so again, I agree with part of it, but then the other part, yeah, who knows?
Okay, so to sum up this whole discussion, right? Fear off the charts. Bitcoin probably has a little bit of downside left in it, but it's not. It's probably getting to the point where your risk reward is there's not that much downside left on Bitcoin, and there's starting to get to the point where there's probably more upside than downside. The
Yeah.
market has seen quite a big correction. I think Raoul Paul called it the window of pain right now.
Window
He
of
thinks
pain.
we're still in a bull market, but this is a bull market correction. Probably not going to see extended multiple year bear market here. Things could go lower, but it's probably not going to be like 50% lower from
Yeah.
here.
So there was a comment on X asking about, please tell me meme coins. Meme is spelled incorrectly here. Um, yeah, meme coins are all meme coins basically trend to zero. So, and even the meme coins that will survive, they'll get absolutely annihilated during downturns. That liquidity just vanishes. So everything we're talking about basically pertains to Bitcoin only. And we're in again. You just look at the charts. We're in just this price bleeding right now.
Yeah.
Now's not the
I mean,
time to be holding meme coins at all.
yeah, and on the meme coin question, I think something somebody said recently really resonated with me about this, which is like, um, why did meme coins do so well last year? Right, it's 2024. Right, why? Because we were still in the Biden era. Everything in crypto was still illegal, and meme coins were just like, and everyone was pissed off about like the way VC and like the unlocks and everything and all the crypto VC projects. Meme coins were just like a pure expression of what there was nothing else you could do. There was no way to legally like generate revenue and have that accrued to token holders. So this hot ball of money of people in crypto and whatever, like financial nihilist investors around the world were like, well, yeah, meme coins, that's just like a pure expression of it, and that's why they pumped. But then we got some like regulatory friendliness coming in, and there are now ways for crypto projects to actually um, accrue value like to the token based on like the revenue generated by the protocol or project or app. And so why would you invest in meme coins? I think that's kind of their day is probably mostly gone. Their day in the
I
sun.
I I I agree with that. That really makes a lot of sense to me. And I think that's probably right. Um, and explains a lot of the meme coin why meme coins did so well this year. I do think meme coins, if we get like an alt season, right, like a proper alt season, if uh, you'll see that happen again, right? You'll see meme coins inevitably do well, but
But so will other niches of the market,
yeah, but
whether it's
what I'm saying though
AI
is
agents or yeah.
what I'm saying though is that like this year we haven't had. Again, I'm supporting what you're saying even more, which is you really have to kind of try to find a reason why meme coins did well this year because there didn't seem to be a real reason. And that
Did meme
what you
coins do well this year?
the beginning of the year they did.
Yeah, well, it was more last year thing.
Yeah,
Remember, Token 2049 Singapore last year was kind of the peak of meme coin euphoria.
yeah,
So
uh,
that's over a year ago.
yeah. December to March there was a little meme coin craziness as well, right? Because I was following the Murad thesis, and
Yeah.
so you saw that kind of just play out. But um, but yeah, the other thing is, listen to this. Here's a hot take, Graham. I've been thinking about this all week. So you've seen you've seen the Solana, all the people like Solana royalty really kind of latch on to this privacy thing. I don't know if you've noticed this, um, and it's been a bit bizarre for me to watch. And I'm like, well, why? I don't understand why. Here's my half baked theory. All the Solana royalty have realized, kind of as what you've said, that this meme coin thing is dead. So Solana doesn't really have a major narrative or a thesis, right? Because they were the meme coin chain. This is kind of vaulted Solana, I think, into the spotlight for the past year and a half. Meme coins, meme coins. I think I think the royalty has latched on to privacy as like a next narrative that can kind of represent Solana, and it's just a better representation in every aspect. Right? It's more cypherpunk. It's less like a joke or less extractive. Maybe seen as more serious, and I think that's why Solana has the people who represent Solana have pivoted so hard to privacy, is because they really want to kind of get off of this we're the meme coin chain thing. They want to kind of distance themselves in a serious way, and they need to, because if, as you say, meme coins have had their day um, for very structural reasons or whatever, then they Solana needs a new narrative. You know, I don't know what
Yeah,
you think
that's
about that.
interesting. Uh, what I would wonder is how can Solana benefit from privacy? Like, is there some
Well, they've been
privacy protocol built on Solana?
they I mean, this is why I've been searching for an explanation. They have pivoted insanely hard to Zcash. I mean, have you seen this?
Yeah.
There's a Solana hackathon going on right now on privacy with Zcash, right? Like this is
Okay.
so I mean, they're going, why are they going so hard for Zcash? What, that doesn't make any sense. This is Solana, right? Well, the point is that Zcash allows you to kind of swap between assets on one chain into Zcash and then back in, right? So you can get privacy um, by moving into Zcash and then moving back out of it. And Solana, I think they're really trying to pivot hard into this, where they can kind of tie themselves closely with Zcash and other privacy aspects, and become maybe the privacy chain or something like that. And so again, that's the explanation that kind of satisfies me for the time being. It explains a lot of why they are so hard on this Zcash thing. Is that they want a new narrative around privacy. So anyway, that's the best explanation I have for it.
Interesting.
Yeah.
Yeah, definitely something to follow. Let's get into the airdrop discussion, David. So this was kind of dominating certain corners of the crypto Twitter timeline. It started with, what did it start with? A notorious airdrop farmer.
Yeah. What's his name? ICO. What's his name? ICO Beast. ICO. Yeah. ICO Beast. He had this great post. Basically, this notorious airdrop farmer ICO Beast came out with this post saying airdrop farmers are terrible.
Airdrop farmers are the single worst possible foundation for a community, except for maybe gaming airdrop farmers. So, anyway, they're all mercenary gaslighters who will literally turn the barrel around on you the instant you suggest that they'll get less than they think they deserve. And they all think they deserve way more than they're worth because we conditioned them for 4 years to believe that spamming random transactions on test nets or playing the role of GM scientist in Discord for a few months somehow produced economic value in the 4 to 5 figures. Skin in the game or GTFO is the path forward.
So yeah, you had, first of all, you had the requisite, why the hell are you saying this? You're an airdrop farmer comments from everybody. Like,
Yeah.
but then you had everybody kind of on crypto Twitter CT giving their take on airdrops. I think mostly from what I saw, most people basically agreed with this. Seems to be the consensus, is like, yeah, where airdrop farmers are now is net not good. But I think Hasib of Dragonfly Capital, he had like kind of the strongest anti airdrop farming take.
Yes, very well written dissection of it.
Basically saying airdrop farmers are, in almost all cases, he might have even said in all cases, it was very kind of strident, anti-airdrop farmer. He was like, from the VC perspective, from the protocol perspective, from the retail perspective, airdrop farmers are bad for everybody. So
Yeah. It's just like, who are you trying to fool? Because airdrop farmers are by definition farming the chain, right? They're trying to like pump numbers. And some people have said, "Oh, well, that's great," but who are you trying to trick with the pumping the numbers? Right? Is basically Hasib's argument. Like, is it VCs? Well, okay, but then what? Like, congratulations, like you've extracted money from VCs, I guess. But are they really that dumb? Um, yeah. Is there any scenario where airdrops are actually good?
well, so again, I think the consensus was generally airdrop farming is not that great. But then maybe the biggest proponent was Jesse Pollock of Base. He's the co-founder, lead developer, lead whatever of Base. And he actually said airdrop farming can be good. And he had this like line, which is, quote, "It is up to us to grow farmers into builders." So he's basically saying, Graham, if I had to paraphrase this, if airdrop farmers are bad for your protocol, it's your fault.
Okay, I mean, grow them into builders. What does that actually mean? I mean, like, okay, the what is one good thing about a airdrop, I guess, is you can get some attention, right? It's an incentive. You get some attention on your project, right? Like, okay, try it out. You're going to get rewarded, and then hopefully, the people who try it out will see the benefit of the product. They'll be like, because it's hard to get people to try something new, right? So you that's what it like um, loyalty points and all this stuff is kind of all about. Like there's incentives, when these new digital point of sale like points systems all around the world started rolling out over the last 5-10 years. They all came with like significant discounts. If you use this point system, you're going to get if you use our like point of sale system, like when I was living in Indonesia at the time, like grab points or whatever, you get discounts, right?
Yeah,
You're
PayPay
muted,
did that
David.
in Japan. PayPay did that in
Exactly,
Japan,
they
right?
all
Like
did
you
that, right? And
cash back, right?
right, cash back, right? And it works, right? Because like you need that incentive, and then once you're in, you're like, yeah, this is better, right? And so that's, I think, the one reason why, one way that airdrops can be good, right? It's just a little incentive to get people to try the product. And then critically, the product actually has to be better than what was being used before, right? And then people will continue using the product. You don't have to airdrop them, and you can slowly turn off the incentives.
Yeah, so I mean, there's a couple things here. It's such a great discussion, but I think we talked about this a little bit before we went live, which is um, I think maybe even airdrop is like the wrong word for this category. It's almost
Yeah.
like rewards
Yeah.
or community building. Like so, what you're describing with like PayPay and in Indonesia, that's an airdrop basically, right? It's the company is giving users money or money equivalent things to stay
Yeah,
in
they
their
might be
ecosystem.
operating at a loss at the start
Oh,
there.
definitely.
The incentives they're giving out like completely eat into their profits, and maybe
Yes.
even they're operating at a loss, but they're like funded. They've got they've got capital to try to bootstrap this thing.
Yeah. And like for example, PayPay, they did it where there was a cash component where you get just straight cash, which would be like in crypto that would be the equivalent of like just a straight token drop, right? Like you can just cash out. But they also did a thing where you could buy part of the cash back was in stock, actual equity that they would invest through their application, right? So
Yeah.
that you can't that you just can't cash out straight away, right? So there was
Yeah.
this.
And it's crypto is different because you're not getting equity, right? And most of these rewards systems are paid in the token, which was just conjured out of nothing. So that's the advantage of it, actually, um, because you you can a project can draw from this war chest that they just like printed.
Well, it depends. Sometimes, like I know for crypto projects, especially with VCs, they set aside a certain amount of money, assuming that people are just going to sell the token straight back. And so they're like, okay, we're going to put 500 million or whatever it is
Yeah,
aside to kind of fund people who want to swap out of this kind of thing, right?
yeah,
So that's similar to what like PayPay did, which they were like, okay, we're going to have this campaign reward. We're going to set aside 100 million. This is our
yeah.
marketing
Because
budget
we don't
for.
want our stock to tank, so we're gonna have to buy back effectively the shares that we're giving away,
Yeah.
the
Um,
rewards that we're giving away. Yeah,
so I mean, maybe airdrops is even like a more broader category is basically like rewards or trying to build a community via a rewards or a point system. There's a lot of ways that this is done. You saw like Mega ETH and Monad do this through I wouldn't even say an airdrop, where basically you got points to then be whitelisted for an allocation. So you still had to pay,
yeah,
right? You're still
yeah,
paying straight up, but it's kind of like an airdrop because um, what they were selling their tokens for was at a lower valuation of what it was going to be estimated to go on onto the actual market at, right? It's like
Yeah.
2 to 5 times lower, which is in essence kind of like an airdrop because you're getting like almost like a guaranteed return instantly. Um, from someone from our team, we talked about this internally. This topic, airdrops. Um, are airdrops good? Are rewards good? And we have a reward program, and someone from our team said, "quote Airdrops are the single best foundation for a community," which is a very strong statement. We can talk about this and whether we agree with that or not. But um, even internally here at Bitcoin.com, this is an open question, and um, I do think that maybe Hasib is a little too um, maybe too negative on airdrops or rewards as a way to build community. I do have, I think they can be good, I guess. Although I'm generally more on the negative side. I don't know how you feel, and maybe you can share how we approach this and how we handle rewards.
Yeah. So I think just points farming and then giving an airdrop to people, uh, it's a recipe for disaster. I know for in my personal case, I've received like quite a few airdrops over the years, and have I like I got an Eigenlayer airdrop and Athena airdrop. And did I is that because I never really used those things? I just like figured out that okay, if you can be eligible if you do this thing, and then I immediately, as soon as I got the airdrop, I'm like, okay, that's done. I'm going to stop doing that now, and I'm going to sell these free tokens that I was given, and yeah, move on to the next one. I think like that model, um, every everyone sort of realizes that's how it is. That's why it's so that just doesn't work anymore. Now there's another model where like liquidity farming or
Liquidity
like
mining.
in liquidity mining, right? In DeFi summer, right? They needed to get deep liquidity on their decentralized exchanges, and so they offered incentives. That makes a little more sense, but that worked for a while, right? But it quickly stopped working because other projects would just launch some like a copy of that, and the liquidity would move there, and the where it was before would just get wrecked.
Well, also, people learned it worked really well at the beginning, but then once it became like a mature game, it just became industrialized. And you got like, I don't know if you remember this. Do you remember FTX? I remember this one incident. FTX at this time was known as like just this insanely mercenary liquidity miner, and they would go on to new chains. Like I remember when they went on to Trader Joe on Avalanche, right? And they mined the hell out of Trader Joe, like just and then the day that Trader Joe ended their rewards, they just withdrew like 2 billion in liquidity like that instantly, and they took like whatever it was 200 million in reward tokens. Market sold the Joe Dex token, and it just like plummeted into cratered, and then they took all their liquidity and they moved on to the next Dex on a different chain. Brutal, right? Absolutely extractive.
Yeah.
And so yeah, I mean that kind of stuff. Once it matures and it becomes like this kind of extractive game, it's just awful, devastating.
Yeah, and what we're doing in the Bitcoin.com wallet, in the Bitcoin.com ecosystem, I don't think you would really describe that as an airdrop. We have done airdrops in the past for Bitcoin.com's Verse token, but now the focus, and like we've learned lessons there, but the focus really now is on quests, and like just some small incentives to get people to do things that are not that easy to do, to get them to explore the app and understand like all the features of the app, and you just like offer these little incentives along the way. Some are bigger than others, but like for easy tasks, right? Like even just reading a news article in the app, like in the Bitcoin.com wallet app, there's news integrated into the app, and um, people could get a little token just for like checking the news, right? And then they start to realize, oh, okay, like this app has this feature, right? I wouldn't have realized that had I not like got this notification, or it wasn't in the UX somewhere, that I can earn a little bit of like, oh yeah, okay, sure, I can earn 20 cents for like clicking a few buttons. And then in that process, right, you learn that all the features of the app, right? And so we found that to be quite effective. And it's like, is it life changing money for these people? No, but it's enough to get them to really understand the nuances of the app,
Yeah,
and
and
basically, and to teach them like how to like use self custody, and use like, okay, now that you've received a little bit of this token, what can you do with it? Right, you can stake it here, right? So you're like slowly teaching people like what this whole ecosystem is about, DeFi and everything.
yeah, I mean, you're incentivizing people to learn how to do stuff, right? Like, I mean, I again, obviously, I'm biased. This is our own product, but I do think that you see this in gaming all the time. Just as an example, I've talked about this for years. When I start playing a new mobile game, right? I remember you play these card games, for example, on your phone. At least I did. Very complex, really difficult mechanics and all this. They use like in-game rewards all the time. Um,
Yeah,
and in these games, you might say, oh well, this is not worth money, but to get some of these rewards, if you can actually just buy these rewards, right? So you can put money in, and they're giving it away for free by completing tasks, and then it really does
yeah,
help you understand everything. It does incentivize people to try new things and move out of your comfort zone. I think crucially, what's important with this, Graham, is you don't get to that late stage where you have these like just these industrial airdrop farmers rewards point operations, that
yeah,
just work at this just kind of like inhuman scale. And if you look at like PayPay or some of these other processors, the physical world basically limits their ability to do that, right? Like, you just because you have to operate in the physical world, you can't really get to that scale. So that's like a hard limit. And for our wallet as well, there's a physicality to it, right? You have to go through it. So it's much harder to do what you see with people who are trying to airdrop farm, like the Mega ETH or Monad, or um, in the past cycles, liquidity mining, which you can kind of
yeah.
spin up millions of accounts and stuff like that, right?
Yeah, exactly. I mean, we still do face those kind of attacks in the wallet, but there's ways around it. There's ways to mitigate it, and like our team has been really focused on that towards the goal, which is just to, yeah, like get people to fully understand the potential of the app and use all the different features in it, and then eventually just be like, yeah, this is an app that I use all the time. I know the ins and outs of it, like you're describing, David, like a game, right? You got to get through that learning curve, and so that model works for products like ours.
Yeah. But yeah, so getting back to this broader thing, I think the traditional airdrop model, like you were talking about with like Athena and all various things, I agree with you. I don't think that works very well. I don't understand why teams still do that exactly. Um, and then there was discussion on a lot of discussion, because this is a great topic, but then people are like, well, hold on, what about hype, right? That was just like a straight up airdrop. To me, that's a little different because the people who did well with hype, they in essence were paying for it, right? Like so they're trading on the platform. Hype was generating fees off of that trading, so in essence they're paying for that, right? um, but also you get this like early stage airdrop phenomena where airdropping was kind of it was still airdrop farming was still happening, but before hype airdropped, it was kind of a dead thing, right? Like it was just kind of played out, I would say. And then after these people who after hype airdropped and it did really really well, it was like a rejuvenated, like oh wow, you can actually make a lot of money on this. And so then you saw this kind of resurgence of airdrop farming. So I think it can work, but it's really really rare to have something like hype where you can just blindly airdrop and somehow that catalyzes a community in the way it has with hype, especially if everyone is expecting like $1 million payout or something like that, right? You
Yeah.
know?
Yeah. Yeah, and then the other thing people have done right is hint at an airdrop in order to like attract attention, and that kind of can have just as much of an effect. And they don't even ever have to do the airdrop if it's served its purpose of bringing people into the app to get them to try it out.
Yeah. Okay. So we have a
Obviously, that's
comment.
pretty dishonest.
Yeah, we have a comment here. So based on what I interviewed from one Web3 gaming CEO, oh, this is from Regina. She's on our team. He said airdrops is good, but first we need to know who are the users who will receive it, um, as other users may not be as interested. I mean, and this is true, right? This is kind of the how do you say? This is the whole game, if you will. You want you want to give airdrops to reward the real users, right? Um,
Or to create real users.
okay, yes,
Not necessarily. I don't think it's about rewarding them. That's sort of a that's not the goal of it. The goal is to create or to like nurture users,
but also like
build users.
if you have users who are using it, basically it is a way to like strengthen the community and to reward the people who are using it, in the best case before they even knew that there was going to be an airdrop, right? Like this is like
But
it's
what's the
kind of like
point of that? Like, because
because you
then
want
they're
the
just going to be more loyal. I
yes, and
guess what
you
you
saw
want,
this with
it's
hype.
critical. It's critical. Okay, but I think that's maybe a special case. I think it's critical
That's the
to if you're going to drop a bunch of tokens on people, there's got to be like something they can do with it that's positive for your ecosystem.
I mean, and this is what you saw with hype, which is all these people who got airdropped a crap ton of money, they stuck around and they've been building on hype, right? All
Yeah,
these
or like for example, right? Like, okay, we're airdropping you these tokens. If you sell them, fine. But if you don't sell them, you keep them, you're going to get all of these benefits.
yeah, yeah. I mean, I would say with hype, there hasn't been all of these benefits other than staking to get more hype. So yeah, it's yeah, that's the hard aspect of it. Like what well, okay, it's different with hype though, because then it's a revenue model, right? So you're holding hype because the protocol um, accrues 90 whatever it is 95% of revenue to the token holder, right? So
Yeah.
that I guess that's the main benefit of that.
And then I guess all those people who got that airdrop, they're like very exposed to the education in the system, like the information coming out of the system, the hype. So they know that. it's going to, they're convinced that because of, for example, that buyback and burn or buyback mechanism, these people are convinced that it makes sense to not sell the tokens that they got airdropped. So
Yeah.
you've got this loyal community of long-term holders
Yeah. And
who are
I
very well
think,
educated on the long-term prospects of the protocol.
yeah. And, honestly, I think it's pretty, it's pretty consensus that these .hl people on crypto Twitter, they're by far the most annoying people on the timeline this cycle. It was maybe, I don't know, .eth or the Chainlink people, XRP people last cycle or whatever. um I don't know, the .hl people, they are just they're everywhere and often insufferable. So it really did like make this diehard contingent, this advertising arm, marketing arm of
Yeah,
the hyperliquid
yeah,
ecosystem.
yeah. I mean, that's the dream for uh, projects that like plan big airdrops, that they're going to be able to create that. I think it's much easier said than done, and a lot of stars have to align for it to make sense. Like, maybe it only works in a like perpetuals exchange scenario, like a hyperliquid.
Yeah, interesting, very interesting topic. Just very briefly, I know we're almost out of time. We're way out of time. But I just want to touch briefly on this Uniswap proposal, because this is related to what we were just talking about. Uniswap is going to turn on the fee switch, a la Hype.
Is that guaranteed?
No, it's a proposal, but
There's a proposal.
it's a proposal, but it's from the creator of Uniswap, Hayden Adams. So
Yeah,
the likelihood that this gets turned on is incredibly high. I bet there's a poly market for it. I wouldn't be
yeah.
surprised if it's like
People have
99%
been
plus or something like that.
talking about this for like half a decade.
Yeah.
When
Look,
fee switch.
looks likely to happen though, especially when you have how I mean it's a DAO proposal, I guess, right? So
Yeah,
um obviously there's an equity component and there's a DAO component. The fact that the person who, I guess, runs the equity part is proposing it means that the equity side is 100% on board. So that probably is the most difficult thing. Is Joe Schmo makes a proposal on this, the equity side of Uniswap can just smack it down, right?
good
So
point.
in any case, it's a good it's a everybody was happy about it, but it really did set off a thing of like, what is the best way to return revenue to token holders, right? So we were just talking about this, right? Like, is it buyback? Is it buyback and burn? Is it through a staking token? Dividends through a
Yeah.
staking token, right? And there was a lot of people kind of chiming in here on this, and I don't know if you have any thoughts on this at all. We don't have to cover it in detail because we're way over an hour now, but I really liked this conversation. I love this kind of stuff. There's no like definitive answer, and you saw so many titans of crypto giving different takes on this, and they're very cordial, right? You had like the person who's running Curve give his take. You had Solana co-founder Anatoly give his different take on it. And yeah, it's great. It's great to see this kind of like
Yeah, it's very, very
discussion.
interesting. Like the question between like the equity in the company and the token, like how do those things interact? It's very complicated. Um, like as you said, with if Hayden Adams proposing this thing, obviously he's got buy-in on the equity side, and they're like, okay, they've got a they're convinced that by turning this on, they can improve the value of the equity. Right? That's got to be the only um, way that it would get passed.
Yeah, part of the proposal, I think, is to combine both. So the equity is being combined basically with the token, as far as I understand it. I might be wrong. So there's like the equity company is going to be folded into the, I think, the DAO structure actually. So all the incentives are aligned now. That was the biggest, maybe the biggest criticism of Uniswap this whole entire time, was that, like you said, you have these very, very kind of opposite incentives here, um, where the equity people are going to have very different, potentially very different, what's it called, goals than the people who are on chain and under the DAO. So
Exactly. So finding a way to combine those where both sides are happy is, or it's some kind of flywheel where like the increasing the token price increases the equity value and vice versa. That's the holy grail.
yeah, or you do what Hype does. There is no equity component, as far as I know. Right? It's just the token, basically.
That seems a lot more simple to me.
Yeah.
But the reality is that most crypto projects have both, like Ripple versus XRP token, and yes, it seems like now with on Ripple's case, there might actually be a path to those things being like synergistic, like because Ripple has used profits from XRP to buy real businesses, which they're finding ways now to take revenue from that and then buy back XRP. So it can be good for the price of XRP, which can then lead to being able to buy more businesses that generate more revenue to buy back more of the token. But none of it is really like written in stone, like the way it is in equity land, where you just like, you have to do what's best for the price of the stock. It's so there's just a lot that needs to happen here for this to really make sense, and that's why, yeah, like something like Hyperliquid, where I think there is no equity, makes a lot more sense. It's more possible for the incentives to be aligned properly.
Yeah. But putting that aside, there's also this narrower thing, which is, what's the best way to express this in the token? So there was a lot of discussion online, on CT, about, is it better to simply buy back the token? Let's say that you have something like Hype or Curve or things that are just completely on chain. Is it better to just buy back the token, and this is the way that you're going to, so you take the revenue and then you buy back the token? Is it better to buy back the token and then burn it? Hype doesn't do that. It's not buy back and burn. I think it's just buy back, right? Or is it something like Curve does, which is, it buys back the token. No, wait.
You stake it. You can stake it. So you get this dilution for of the token in general, except for everyone who's staking isn't being diluted as much. So I prefer the buyback method. It's a lot simpler, seems fairer, and I think it just also just leads to less sell pressure.
Now, do you buy back and burn it, or do you do what Hype is doing, which is you buy it back and then you hold it in like an emergency fund, in like it's a big bag sitting on chain?
Yeah, I think both are possible, because if the if you don't burn it, right, if you're holding it, in both cases, it's taking coins like off the market, right? It's buy pressure, right? In the case of where they're not burning it, where they're holding it, obviously they're going to have that as a war chest in the future to grow the protocol or project in some way. The downside there, of course, is that when they do that, they're going to have to sell, which is sell pressure. But at least they have ammunition to like save the project or like grow it, more ammunition to grow it in the future. Right? And that's basically the dichotomy there, or the way it separates.
So yeah, I mean, again, very fascinating stuff. Love to see this kind of discussion. It's makes me a little nostalgic of past cycles this week to see like, I don't know, genuinely fascinating discussions rather than like, I don't know, who
financial nihilism.
pumped up.
No, you're right. And once we get a little more clarity, I guess, with if this clarity thing ever passes, probably it's not going to happen this year, according to the prediction markets. It's going to become more clear how this works, and then you are, I think, going to see some of the real benefits of this sort of capital formation and structure that were touted when I got into crypto in 2017 as it being so disruptive and a whole new way to raise money and run businesses. That's actually going to finally be possible. And I think when that actually does happen, I think you will see like some crazy explosions of like token prices and not just that, but like money printing, really good businesses supercharged by this model, like in a way that is you can't do as well even in like when you IPO in the public markets.
Yeah, there was one. Did you see Hayden Adams? Trying to pull it up here now. Did you see Hayden Adams' comment to the former chief of staff of the SEC, of the Gensler era SEC, this week?
No.
I thought this was pretty.
Welcome to the stream,
awesome.
where our passions rule
in my mind,
and communities get hyped. We don't just create, we create a scene. Some of us game, others want to break out. Some of us come to hang out, while others come to shout out. We may be here for different reasons,
but what we all have in common is the need to share. Whether it's a hobby or a profession, it's definitely not a phase.
This is our moment. Because when we go live, it matters. It defines more than who we are. It defines culture and community. We're not just changing the game. We're building a whole new...
I honestly, I don't usually like this kind of use of profanity to attack somebody, but it just shows you, it just reminds you, dude, like how crazy it was in the Biden era, in the Gensler era SEC. It was insane, man. So then you have... Mind if I read this?
Yeah, go for it.
Right. The fact that we were restricted in how we operated while you plus Gensler weaponized the government against us simply proves the chilling effect that a weaponized agency can have. It's not evidence of anything else. Fuck you for thousands of wasted hours of my life. Little frustration there bleeding out at the end of that post. So yeah, I mean, this is kind of dovetails with what you were saying of again, clarity will improve upon the landscape even further. But what we already have is giving us things like Uniswap, and then finally being able to probably to turn on the fee switch and kind of unite the equity, maybe, or align the equity in the DAO. And all possible because you don't have this regulator who's just basically stepping outside of its actual authority. Pretty wild how much of an effect a government organization can have on private business.
Yeah, this Amanda Fisher she's less regulatory hostility means yes, this clearly was illegal back before crypto purchased the White House. Yeah.
Class act, this lady.
Former SEC chief of staff and advisor in the U.S. House and Senate.
So anyway, I just thought that was kind of like, I don't think I've ever seen Hayden Adams say, like, be this incendiary, or not even incendiary. How do you say? I don't know. So it was.
Yeah, I mean, they spent at least tens of millions of dollars defending themselves against the SEC, only for it all to just dissolve. So yeah, got to feel like a huge waste of time.
Yeah, and also apparently ridiculously stressful. I remember very distinctly Yano from Blockworks was talking, I guess 2 years ago, on Empire about their conference, Permissionless. I think it was for 2023 or 2024. And Uniswap, along with every other major DeFi protocol, pulled out of the conference. So Hayden Adams. And the reason that they pulled out is they didn't feel safe to have their executives and founders be present in America for the conference. Yeah. I mean, that's like, it's crazy, man.
Yeah.
They didn't even feel comfortable having them in country. Anyway, so yeah, we've come a long way.
Yeah. All right, let's wrap it up there, David. Great discussion. Thanks for your insights. And yeah, we'll see you on Monday for our weekly news recap. Have a great weekend.